Hello, everyone, and welcome back to Finance Bros, your navigator through the complex world of personal finance. Today, we're talking about something that affects us all: tax planning. It's not just about filling out forms. It's about understanding the system to make it work in your favor. If you're new to our channel, don't forget to subscribe and join us on this journey to financial literacy. Let's get started. Before we begin, it's important to note that while we strive to provide you with accurate and helpful information, this video is for educational purposes only. We always recommend consulting with a professional financial advisor or a tax expert for personalized advice. Every individual's financial situation is unique, and a professional can help tailor strategies specifically for your circumstances. When was the last time you thought about your tax strategy? Are you sure you're not leaving money on the table? Consider this. It's estimated that Americans overlook billions in tax deductions and credits each year. That's money that could be in your pocket. Let's explore how you can claim what's rightfully yours. Tax planning is the art of analyzing your financial situation in a tax-efficient way. It's about more than just saving money. It's about optimizing your resources to reduce your tax liability legally. The main components: your income, possible deductions, available tax credits, and choosing the right filing status. Each of these plays a crucial role in your overall tax strategy. Let's talk deductions. Common ones include mortgage interest, which can be deducted up to $750,000 of indebtedness, and education expenses, where up to $2,500 of student loan interest can be deductible. Don't forget about healthcare costs, where expenses above 7.5% of your adjusted gross income can be deducted. But how do you choose between itemizing or taking the standard deduction, which for 2021 is $12,550 for singles and $25,100 for married couples filing jointly? It all boils down to which option gives you the higher deduction. And remember, keeping detailed records is key to substantiating your claims. Now onto tax credits. Unlike deductions that reduce taxable income, credits directly reduce your tax bill. The Earned Income Tax Credit is great for low to moderate income earners, potentially worth over $6,000. The Child Tax Credit, which has been expanded to up to $3,600 per child in 2021, can be a significant boon for families. And for students, the American Opportunity Tax Credit offers up to $2,500 in educational credits. Ensure you meet the eligibility criteria to take full advantage of these opportunities. Choosing the right filing status can dramatically impact your tax liability. For instance, the head of household status typically offers more benefits than filing as a single. And when it comes to filing, technology can be your ally. Tax software can simplify the process, but if your situation is complex, a professional might save you more in the long run. And don't forget about deadlines. Filing late can lead to penalties and interest. For those looking ahead, consider your retirement contributions. Contributing to accounts like a traditional IRA can lower your taxable income now and grow tax deferred. HSAs are another smart move, offering triple tax benefits: deductible contributions, tax-free growth, and tax-free withdrawals for qualified medical expenses. And for the long haul, think about how your investments can impact your taxes. Capital gains tax strategies and estate planning are crucial for maintaining tax efficiency over time. To sum up, effective tax planning is about making informed decisions to maximize your returns. Start early, stay informed, and don't hesitate to seek professional advice when needed. We'd love to hear about your tax planning strategies or any questions you might have. Please share them in the comments below. If you found this video helpful, give us a like, share it with your friends, and subscribe for more insightful content. Remember to hit the notification bell to stay updated on our latest videos. Until next time, stay smart with your finances.